Hey guys, Dr. Banks here. So very quickly, we'll be talking about the concept of market structure. Okay, a lot of times we have been sold the picture of the fact that, of the myth that price has to always present itself in a channel-like formation, okay, creating higher highs and higher lows for uptrends in a channel-like formation, right? Okay, which is absolutely not true because price must not work in a channel-like formation for it to be structured. Okay, the most important thing in structure is for an uptrend is the creation of a protected low, okay, and a swing high that should be taken out as we move in structure. Okay, so it's quite simple to identify structure or the right structure when you work with this concept. So instead of looking out for higher highs and higher lows, you're looking out for a protected lows and swing highs that should be taken out for uptrends. And you're looking out for protected highs and swing lows that should be taken out in a downtrend. Okay, so you're looking out for, okay, protected highs that should be taken out, that should not be taken out, and then swing lows that should be taken out. Okay, protected highs that should be protected, as the name implies, and swing lows that should be taken out in a downtrend. Okay, that is to say that structure can decide to form in this nature. Okay, until we have a structural shift. And then we still have this as a protected low. Okay, and then we can still have this area here as our protected low for an uptrend where the demand forms, and then we can still have this here now as a break of structure. Then now leads us to a new lower high and violating this low, betting a new lower low. So this becomes a new protected low in our structural range that bets a change of trend. Okay, so it is important to note that price must not deliver itself in a particular way. And then you must be keen to understanding structure. You must be keen to understanding structure and structural ranges. Okay, so this low stays becomes our protected low because this was our previous what? Swing high. So until price violates the swing high, there is no break of structure to the upside. Okay, everything that happens inside of this range is a mere internal structure. Internal structure. So if I have a violation of this, it is my internal structure break of structure. Internal structure BMS or minor structure break. It is not actually my range break of structure because this is the range here and here. This is my high and this is my protected low. So until this high is broken, I do not have a break of structure. What I have is an internal break of structure. Okay, so price can play alongside everywhere inside of here and then still continue to break structure. So refuse to be deluded by what is happening inside of the structure as it is internal. It is inside of the structure. Okay, so very quickly, I'll just try to give simple illustrations and we'll do something else. Okay, this is not something I should stress over. I want to believe they are quite easy to understand, so I would not have to waste too much time talking about them. Okay, now you must understand that there is always structure inside of structure. Okay, while the 4-hour time frame is printing, while the 4-hour time frame is printing amazing bullish structure. Okay, while the 4-hour time frame is printing amazing bullish structure. And it is important to note that we have smaller time frames inside of this. Let's say the 1-hour time frame, giving us, we have the 1-hour time frame inside of this, giving us internal structure. Okay, so at this point, we still have smart money inside of the structure, selling to buy. Okay, the sell here is just a retracement leg, okay, of this corrective wave into an area of what? Demand that can be seen as the corrective, can be seen as the protected low of whatever higher time frame structure it is coming from. Okay, and then the idea is just to tap into that level and buy. So as we are doing that, we are also grabbing liquidity from the lower time frame. The higher time frame run is your lower time frame trend. So while the higher time frame is giving us a straight run to the downside, the lower time frame is still printing clear lower highs, lower low, clearing double bottoms, creating all of that, and then smart money keeps selling to buy, selling to buy. Okay, so that's how we continue, and then lower time frame break of structure has just occurred here, and then we continue inside here, and we continue, maybe consolidate a bit, and then tap on liquidity here, and then broken structure, came back inside here to mitigate the level of demand. Okay, and then continuing to the upside, as the case may be. Now, it is important to note that the fact that this is playing out on the 4-hour and what I have drawn in red is playing out on the lower time frame may just be that the whole 4-hour business is a continuation of a higher time frame buy move. And the whole while, this was just, the 4-hour was just a retracement to go and tap in on a daily zone. Okay, on a daily zone that should continue with the business of price on the daily time frame. Okay, it is the fractal nature of price. That is why you should be concerned about the higher time frames when you trade on the lower time frames. Okay, and then when you trade candlestick structure, be very much aware, be very much open to the fact that there is actually a stronger structure on the higher time frame. If you're trading candlestick structure on the smaller time frame, even if you're trading range structure or trend structure on the higher time frame, you should understand that there is a stronger structure on the higher time frame that controls the lower time frame. So where you can have sells and lower highs and lower lows and double bottom takings and grab of liquidity to the downside, and then you're expecting very huge sales, do not forget that you are still part of a higher time frame single move to the upside, which is just intending to mitigate a daily zone, okay, and then continue the trend that the daily is what creating. Okay, so if you trade with this consciousness, you would want to align with the higher time frame movement. So if what I see on my higher time frame is a smart money sell to buy formation, then I'll be looking forward to taking sales in this area that is the retracement leg, because I know that the sell moves, we have more paramount moves or more dominant moves in this retracement leg, while I have buy moves have dominant moves in this leg. So any other sell I see in this leg is a mere correction, is a mere retracement, because the 4-hour is racing for what? A buy. Okay, so if you have this at the back of your mind, you will not be confused when it comes to trend. So according to the price action structure, this is my swing high, protected low, swing high, right? Protected low, swing high, right? Protected low, swing high. Okay, the moment this protected low gets taken out, then I'm setting that I have a break of structure here, and then I'm looking forward to price retracing anywhere into this region, anywhere into this region is valid. Anywhere into this region is valid. And then smart money will sell, will buy into that region and then continue to the downside. Okay, so my concern is in seeing my break of structure here. That should guarantee me to begin to look for price to retrace into this zone or into the demand level that will be created here, to tap into demand and then continue to the upside. Okay, so this is how the fractal nature of price works. Okay, time frame is being structure is being extended from one time frame or transposed from one time frame to the other. So your higher time frame runs will actually be your lower time frame trends. So when the 4 hour is printing just lower highs and lower low, inside the correction of those 4 hour time frames, we have actual trends printing lower highs and lower lows. While on the lower time frame, higher time frame, you may just see a single box, 3 candle or 2 candle boxes. Okay, ignore the whole jargons on the screen. Come down to do this. 3 candles or 2 candles, come down to do this. But on the 15 minutes time frame, you have clear trends. You have higher highs, lower low, lower highs, lower low. Grab on liquidity, take out liquidity, sell side liquidity being taken, equal lows being taken, and then break of structure where you can have your stopwatch, and then at this point you can have your return to order block, and then continue here mitigation, move to the upside, continuing with the trend of the 4 hour time frame. Okay, let me clear all of this. Okay, so that is the formation of trends. That is the formation of structure. Structure is a tool that smart money use to deliver price. Price cannot be delivered without structure. So when you get in your chart, the first thing to do is to discover what is, for an intraday trader, the only time I look at a daily time frame is if I do not see clear zones or I do not see clear structural range on my 4 hour time frame. Okay, but if I have a structural range on my 4 hour time frame, let's assume I have this on my 4 hour, right? Okay, let's assume I have this structural range on my 4 hour. As at the time I would be trading this market on my lower time frame, this is my structural range. This is my structural range. Okay, and then I have had this break of what? Structure, and I've had this protected high. So in theory, price is not supposed to violate this high or break this high. In theory, price is not supposed to violate this high or break this high. So because of this break of structure, what I am looking out for right now is a retracement back into the zone. Anywhere from the 50% is valid to give me a sell to the downside. Okay, so on my smaller time frame, I will now be looking out for, on my smaller time frame, on my 15 minutes time frame, I'll be looking out for movements like this to occur. Grab on liquidity, minor time frame break of structure, and then ROTO. Okay, this is the price action that will be at play in my lower time frame, and then I will begin to see possible moves back to the upside to mitigate this level. Okay, to mitigate this level, the supply that will be created here, and then the higher time frame continues its trend, and then breaks structure. This becomes my new protected high, right? And this is my break of structure. The same process continues. I'll be looking forward to taking retracements. Okay, I'm looking forward to taking retracements on my smaller time frame, and then with the picture in mind that in theory everything happening inside of here is a mere retracement. everything happening here is a mere retracement. No matter how it presents itself, it is still a mere retracement coming back to mitigate whatever level of supply that will be created here and then enforce sales from the higher time frame. Okay, so while the higher time frame begins to enforce sales, I will now be willing to take in sellers from this point. Okay, with my trading style. Okay, probably a retest to this level and then I root TO, okay, and then break of market structure, right? Break of market structure, return to order block, and then continue with the trend of the 4-hour time frame, or with the structural leg of the 4-hour time frame continuing its sell bias. Okay, because the overall structure that is presented here is a downtrend. The only time I'll be looking to take in buys is when the 4-hour time frame, long buys rather, is when the 4-hour time frame actually comes probably to this point, okay, mitigates a level of demand here, and then violates my protected high. Okay, violates my protected high clearly, giving me the impression that we are done with the play happening inside of here, and then I am interested in going upwards. Okay, I have taken out this protected high, meaning that I do not have funds inside of here. I am now willing to start a new trend. Okay, then I'll be looking for a directional change. Until then, I am sticking with the structure that is presented to me on my 4-hour time frame, and then working with the smaller time frame retracements inside of the structural range. I hope that makes sense.